Hey everybody, hey traders, Chris Pulver here. Welcome back to another episode of the Trader's Path to 100%. This is episode 4 in the playlist. Let's get after it. I want to do an update here. I think it's been a couple of weeks, but just wanted to show the account, see where things are at, see how I'm positioning for the rest of the year, and let's get cracking. So I'm just going to bring up a couple of things, looking at the major indexes. This is the QQQ following the NASDAQ, also the S&P 500 or the SPY. We obviously had a huge rally. If I go to the weekly time frame, this is a pretty wild move over last week. So we've had an incredible amount of volatility in just the last few weeks, and then this week things are a little bit quiet, but we just have this slight little drift. We have CPI and PPI data, so inflation numbers coming out next week for the U.S., and I do think that's going to create some ruckus, whether it's up or down, I'm not really sure. I think that the market is capable of rallying back up towards the July highs. I think that more importantly, it's how does it get there? What we had for this entire duration was the S&P Magnificent 8 or the whatever they're called. You know, the Mag 7, the Enormous 8, whatever. You have essentially 7 or 8 stocks that have carried the torch the entire year for not just the S&P 500 but also for the Nasdaq. This rally, in my opinion, I think to get us back to the highs for the year is going to be based in things that are undervalued. So I think the best way to see this and what gave me this impression last week was watching the Russell. The IWM is the ETF that follows the Russell 2000, which, by the way, is way down from the highs. We're sitting down around 33%. We have not had that type of drawdown in the Qs or the S&P at all. The S&P and the Qs were down with a pullback recently around like 10 to 13%. Here we are, from the highs and the Russell still way down. So the reason I was led to this conclusion last week is this weekly candle rallying from a low of 160, just below 162, all the way to 175. That's a $13 or $14 rally. Percentage basis wise, from this low to high, that percentage run is around 8%. We had about a 5 to 6% run in the SPY and the Qs. So clearly there's some more interest in the undervalued plays. Russell 2000 is a lot of stocks. I looked at the IWX, which I think is the Russell 200, and this one is faring a little bit better. So the concentration at the top, stronger companies are doing better than the rest, but this does give the opportunity for small cap to rally, and maybe the market breadth and the overall participants of 490 plus stocks in the S&P that have been underperforming give them a chance to actually see some momentum and buying opportunities to get them back into some technical levels. So all that being said, for the rest of the year, I'm trading essentially week to week. I know that once we get into holiday trading, things get a little bit more interesting. Excuse all the drawings and stuff I have on here. This is some trades that I have for the week. I do have some trades running. I will be active every single week through the holidays. I am looking for this. I'll go into the daily time frame. One thing I noticed from this big push is we had a triple gap to the upside, which is very rare. With CPI and PPI next week, this is what I'd like to see technically. If we run into some resistance in this area, which is going to be somewhere between like this 440 and 442 area, if we start to see a little bit of a drop to at least fill a gap, I would like to see the bulls step back in. If we're going to rally for the rest of the year, we have to see this continued support. I think the hardest move would be that we just keep drifting. Now, I'm not saying that we can't go higher, and we can certainly ignore these gaps. But if we come back and retest July highs, something tells me that those gaps are going to get filled. And so I would be less optimistic in the medium term with bullishness outside of a holiday drift that takes us into end of November, December, see if we have some risk appetite. And like I've said the last several weeks, with a lot of my trading rooms and the YouTube sessions and everything I've been talking about with my analysis, the dollar index is a big play to dictate whether or not the S&P goes higher, the Qs go higher, risk on, risk off trading. What are we trading? I think that the dollar index, as long as we stay below 105.50, the probability looks better to the downside that if we go down on the dollar, then we're looking up in stocks, we're looking up in risk appetite. I think that we could have a stock market rally to finish out the year. I think we could have Bitcoin, which has already taken a launch through that 32,000 resistance. We're up to 37 plus right now. I've got some great positions running on Bitcoin and Bitcoin related instruments, which I'm super happy to let them run. But I think that right now we still have to figure out what's the dollar up to. The pattern looks pretty solid technically. I think I'm going to try to keep it really simple for the rest of the year. Okay, obviously I'll position accordingly, but if the dollar ends up falling, I'm going to be focused on risk appetite. So what am I positioned on? I will tell you. I'm looking for some dollar weakness, and if we have it, I'm going to be Aussie dollar long. I'm going to be Euro dollar long. I'm going to be New Zealand dollar long. This week in my flex trading room, I took a dollar CAD short, and I'm looking for a pound dollar long at a better spot around like 121 or 119. So currency wise, I'm looking to play against the dollar even for the near term. When it comes to stocks, I'm going to be bullish SPY as well as SPX as well as XSP. I mean anything essentially in the S&P, whatever I trade, whether it's a futures index or cash settled futures contract in SPX or the SPY, which is the ETF. I'll be bullish on the QQQ. I also might look at this. What is it? The RSP is the equal weighted S&P, and the QQE is the equal weighted Nasdaq. This could be where there's some more gains ahead because it's not market cap weighted. So those are some other instruments to maybe consider playing. I'm certainly looking to be long Bitcoin and buying dips. So if we have any pullbacks on the charts right now, if we get a pullback to 32K or 31K, I'm buying the dip. If we drift higher, we hit 37 today, filled a pocket. The next level, the next high is 48,000. I'm not going to be complaining if we go up another, 10, 20% on Bitcoin, but I do want to buy some type of technical pullback. I want to be adding to something on a technical pullback. So I still like buying it. It's just a matter of where. Right now, I'd like to buy it at 32,000 or under. If we don't pull back much and we drift up to 40, 41, we hit that 48,000 high, then I might look at a pullback from 48 to maybe 40. It just depends on what we have for, technicals and Fibonacci's and pockets and things like that. What else? I am probably looking for, let's see, if we have a risk on run there. I think that bullish on the IWM and the IWX. That's the Russell, 2000 and the Russell 200. Look, it's a broad market thing, right? This is essentially broad market risk on. If the dollar is dropping, broad market risk on. I don't know how long it's going to last, but I think if I can take it into the end of the year, okay, ideally we see direction drifting into end of year. I would like to have, not really a disturbed chart. If we have a decent breakout, let's go with the breakout. Let's follow that lower volume kind of holiday drift, call it a Santa Claus rally. I'm not sure how aggressive the market's going to be. But if we're in that direction and nothing's stopping it, we have an absence of sellers, I'm just going to stay in that direction. Like I said, next week we have CPI and PPI data. So I want to see how that plays out with possibly some pullbacks and see if the bulls step back in. Another thing we could be watching, I would be looking at gold as well and silver. I'm looking bullish on both of those. Okay. I'm also bullish on uranium. I'm looking to play some coal action over the next maybe 3, 6, 12 months. That's just some commodity plays. I'm not as bullish on oil or gas. I know that it would make sense that we have oil and gas that should go up. We've got a conflict going on in the Middle East, but I just think there's a lot of drama with supply and demand. If we have a global slowdown, that's why oil was in such a rut this year. From $65 to $70, oil was sideways. The lows built around 62.50, and then we squeezed up towards 95, which was that yearly pivot. But oil has been drifting lower in the face of a Middle East conflict. So I'm looking elsewhere for commodities, and I think uranium, coal are pretty decent, as well as Bitcoin and gold and silver look pretty solid as well. So all this right here that I'm showing on the chart, this is all dependent on if the dollar can stay below 105.50. In the event that the dollar ends up coming back up, okay, there's two things I need to see happen. Either the dollar comes up for a divergent top and it settles back in to revisit this, maybe it sets up a topping pattern. This is high to low. We kind of fake out a bull trap on the broadening pattern, and then we come back into broadening pattern middle, pattern middle, or even broadening pattern lows. The flip side would be that this dollar doesn't stop, and we come all the way back to equal highs. Okay, now if that is the case, if the dollar comes all the way back up here, then you can scratch this entire outlook. Because if the dollar is up, more than likely there will not be risk appetite. So I think that more investors stand to gain from dollar weakness and a broad market rally than the opposite. I think the Fed is not looking to raise rates. I think they're clearly in a pause cycle. The probabilities are high for December 13th rate decision. It's going to be like 90% that the Fed doesn't do anything. They've alluded to it that maybe the first rate cut comes in like summer. It'd be like June of next year, June of 2024. And we'll find out. And the only way the Fed's going to continue to raise rates would be, I think we have to have higher inflation. And if inflation is under control, if things are continuing to trend lower, and I use this as a good barometer. Now, this reading on trueflation is rarely what I see for the actual CPI print. But if I just look at the inflation rate, this has been ticking higher. So this is daily trueflation, U.S. labor drivers. This looks about right. Yeah, so I mean, we are trickling a little bit higher. We are at 2.7, 2.8. This is what I'm looking at. So if all of a sudden this is printing higher, 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 and this is an upward trend, then I think that the CPI data will reflect that. The Fed keeps saying that they want to be sub 2% on inflation. 3% is not going to get the job done. 4% certainly isn't going to get the job done. Even 3% to 2% is a long ways away. That's a long move down to have the deflationary pressures to get us down sub 2%. So the Fed's message coming from Jerome Powell or any other cronies in the Fed is not going to change, more than likely. All right. So all that being said, take 10, 11 minutes to discuss all that, to how I'm going to position and trade for the rest of the year. How am I trading? Well, this is one of my accounts here for the portfolio builder. I've come back from a pretty decent drawdown. I started this account at $10,000. I drew it down to like 93.50. Roughly 93.50, 9400. It's back up. We poked above 10,000 again. I've accumulated some positions on these Swiss pairs. I have also done New Zealand CAD. Some currencies I'm also talking about with traders in this class. Aussie New Zealand, if we get a setup, I'll certainly position on that one. And I think New Zealand CAD, Aussie CAD look pretty good as well. So I'm liking this trade. We're getting some positive swap. My balance overall, I'm up, $56 in carry. That's a positive swap trade. That's one thing that we need to be aware of, is the positive swap is very, very real. If we go into something like the dollar yen, I looked at this on MyFX book today for one of my classes, looking at Forex sentiment. This is kind of crazy. Okay, this is potentially the most painful area for retail traders right now. Look at the positioning here for short versus long. 79% of traders, and this is a retail crowd, 79% of traders are short dollar yen. The pain trade is those shorts get ran a lot. Okay, pound yen, 76% short. Euro yen, 90% short. I'm telling you, I have a bad feeling for all these retail traders that are trying to short yen crosses or dollar yen, euro yen, whatever the baskets are, but looking for yen strength. I don't think we're going to get a lot of it. I think we might get some moments of brilliance. We might get a little bit of a sell-off. We might have Bank of Japan intervention. But I think the bigger picture right now is if we go into a carry trade environment, it does not favor or incentivize anybody to hold Japanese yen. You are being penalized in a world right now that has cash rates at 3, 4, 5%. The Bank of Japan is at negative 0.1%. There's still negative swap. So it is going to be the most expensive trade to hold if you want to hold for Japanese yen strength. I mean, obviously the Bank of Japan can switch positions, and that's fine. But as I mentioned in my trading rooms, we talked about this in the live sessions. I think that the Nikkei 225 is ultimately what the BOJ is watching the closest. This is a 30-year run to finally get back to these 1989 peaks. And in order to do that, I don't think the currency has to get much stronger, right? In fact, the BOJ probably doesn't want to get strong at all. So we have this push. We have maybe the same thing here where it just pushes up and it's pausing, and then another push higher comes back to these levels. Now, this area, I could see the Nikkei 225 getting tested. I could see this becoming a resistance, and then I could see the Bank of Japan maybe stepping in to do something, or just technically the market reacts and we have this huge resistance level and we have a stronger JPY, right? And maybe that drops the Nikkei down and we just start to see some rebalancing. I don't know, but I don't trust it. I don't trust the yen at all. I think that we're doing better off in the flex trading room and other Forex trades by just not trading the yen, unless you're staying aligned with the shorter term and just buying dips. I have a trader that's all we've been talking about is look at your alignments, buy near the lows, and just manage risk. So anyway, BOJ is crazy. The Japanese yen is crazy, and right now it's the least incentivized trade, especially with the retail crowd being positioned so heavily, looking for JPY strength. I just don't think they're going to get it. Again, I could be wrong, but usually this is where the pain comes in, where there's more to go, there's more to push until all these traders are stopped out, flushed out, and then we start to see the tops form in the bigger moves that we want. All right. So that's that. Forex wise, I'm just sticking with the Swiss pairs. A lot of the big technicals on the weekly, monthly chart. I'm getting my positive swap. I like the technicals on all these trades. Stock wise, things going pretty solid. I've had some solid gains the last couple of weeks. Got a lot of buying power back. This account, I think the last couple of weeks, I'm up like $2,000 on just this account right here. So I'm pretty happy with that. My goal is if I can take, this account's not super large, like 35K. If I can take this account and make, anywhere between $500 and $1,000 a week, I'm primarily trading, equities, trading lots of options, playing around the SPY and the Qs quite a bit. And so I'm active. I have a lot of buying power, which I want because things like BITO, GBTC, those are starting to pay out pretty nicely. So GBTC, I own some shares. That's up a little bit of profit. BITO, have a couple things running here, up a decent chunk of profit. So these are going to continue to run. These are Bitcoin related, and if I can generate anywhere between like $3,000 and $4,000 or better, that's obviously a nice chunk of injections here for profit. I'm still looking for trades out of China between Alibaba and Baidu. These are some straddles that I have right now with some credit spreads. And also longer term, I'm looking to position and maybe look at timing some long calls, not necessarily taking ownership of the trades without not having the buying power. I mean, Baidu is a $100 and some stock, and Alibaba's trading at $80 some. So I don't have the buying power in this one to take on 100 shares a piece, right? But what I can do is trade a lot of credit spreads. So $2.50 to $5 credit spreads. Position myself long calls. I'm just kind of waiting for timing to see what China ends up doing. Some of my other positionings, Amazon, that's like a no-brainer. Just buy a bunch of Amazon. I'm totally good with that. I have some Amazon with a break even around 140. I've managed some puts for profit, and I'm looking to see. I've got it covered out to the end of the year at the 150. It's the 150 highs. I do not want to lose Amazon stock, so I have a covered call out to 1215. It's trading up to 142 right now. If this gets activated, if we hit 150, I'm going to roll the call, and I'm just going to roll this out and up as long as I can. Obviously, if I lose on the covered call and I roll it, I'm just trying to roll it for positive credit, and I'm going to try to roll it all the way up here to 180 to 190. So the goal is, use covered calls, roll this thing. I don't know how aggressive it's going to be, but we could also build something like this. This could still be a head and shoulders pattern. So if we end up playing with this noisy neckline and it gets a little bit sideways and choppy, I think that if and when we break this, I definitely want to be long and aggressively long on Amazon. I think that if you give this enough time, a stock that's trading for 140 bucks, this ends up in the next maybe 3 to 5 years trading at $500 to $1,000 before they do another split. So would I like a 8 to 9x return before it splits? Of course. So this is probably one of my favorite stocks right now, just to be in and not even think about it. Obviously I want to play with some protection just in case, or just be willing to dollar cost average. But I think Amazon's got some good gains ahead, and this one has not enjoyed the same run with AI as others. So I think that comes into play over the next, maybe 3 to 6 months. So that's an account there. My other accounts, let me drag one down here. This account's doing pretty well. It was around $39,000. Now it's up to 41. Just kind of waiting on some positions. I've got more ownership in this one. Looking for some bounce backs. Some broad market. It's pretty diversified. Got some good gains here in Carnival Cruise Lines. Cleveland Cliffs has some pretty good gains as well. Comcast pretty good gains. It's kind of all over the place. But lowering the cost basis using options, taking some ownership, sitting and buying and holding. And the goal is $30-some thousand, like $38,000, $39,000, get this account back up to $70,000, $80,000 over the next maybe 6 to 12 months. So how aggressive do I have to be? Not very. I'm not like Amazon. Same thing here. It's like I'm up $2,300 on Amazon. If we have any dips and pullbacks, I'm going to buy more. I think this is one of my favorite positions to be in, but it's expensive enough that I don't want to tie up all my capital. I have about $13,000 worth of margin and buying power in the option side. So there's plenty to use, but I need to get creative with applying options and not just tying up a bunch of capital on owned shares. Another account right here. This one's pretty simple. Going into positions. This started out at 30K. It's in a bit of a drawdown. But again, Amazon, common denominator, some Chinese exposure here, Alibaba and Baidu. BITO is Bitcoin related. This one's up. And I've traded some options around this one. I'm just going to sit and hold. BITO, Cleveland Cliffs is up as well. This was up like $700 this week. Now it's back to 222. I still like this one quite a bit. This is large cap China. This is AT&T with some dividends, and this is some uranium stuff. URA, URNM, and I bought some shares today as well. Anything on uranium I like. Anything on coal I like for the next 6 to 12 months. So 30K in a drawdown, but I get a decent run directionally. I think this account gets to 35, 40K pretty nicely, and just looking to continue to grow it. A lot of it might be on the backs of Amazon, maybe on the backs of some Chinese exposure. If and when we get a big breakout, technically I'll be more aggressive on these positions, and also on the backs of a big run on Bitcoin. Bitcoin breaks above 65, 70,000 for whatever reason. These are all looking pretty solid. BITO is looking great. GBT's looking great. Anything with holdings and Coinbase that I have, looking for 2 to 3x return and hopefully a lot more upside. So that's some of the stock and options stuff. Go back to this. All good there. My Forex side, like I said, that portfolio builder doing fine. I'm trying to think, is there anything else? I think that might be about it for right now. So, I mean, I know that the purpose of this is, this is what I'm in. These are the positions I'm trading. It's not a ton of ownership. All right. It's somewhat diversified. This TD Ameritrade account is way more diversified. There's a lot of stuff in here. Some of it is garbage. Like this, some of these are very inexpensive. Like just, if you've ever traded like the penny stock type stuff, it was an account that kind of started with that. I don't love that. That's not my preference, but I took some stabs, throwing in, whatever, $1,000. If it went to 10 grand, 20 grand, there's asymmetry there. I'm willing to take the trade, but when they also fail, then they fail. So I need one winner if I get one otherwise, and just back in with some diversification between, A to W. And some of these are good and some of these are garbage. But the beautiful thing with holding stocks is you never know. You can hold a stock, have a merger and acquisition, have something get bought out, and guess what? You make your money back or it converts into some other stock. So there's ways to do that by just holding, and we'll see what happens. But for the most part, I like where I'm positioned. I'm waiting for better confirmation to get more aggressive on certain instruments that I'm trading. Same thing here. This account, I'm being very active with just trading the indexes. I like the SPY, I like the Qs, position for that almost week to week. I'm going to go back to this chart right here to wrap things up for this video. On the SPY, we talked about it this week in my trading room. This is for Equities on Demand and for Delta Trader. I'm just going to give you a little bit of a rundown. If you check out the video series on my YouTube channel for options, I just did an options 101. I did 4 videos. I did not talk about butterfly spreads, but it is what I like to trade kind of week to week because they offer some really fantastic reward to risks. So you can see here that I have a trade that's offering 4 to 1 by Friday near end of day, 6 to 1, 20 to 1, 10 to 1, 9 to 1. So obviously that's a lot of trades, right? This is way more aggressive than what I wanted. Usually I like to do about 2, maybe 3 butterfly spreads for the week. The problem is this area that I have these 2 little boxes, I couldn't get them filled for a price that I was willing to accept. And I tried to get them filled on Monday. They were just too expensive. So I just waited, and I switched up a little bit. Instead of going like $4 to $5 wings on the butterfly spreads, I went to 2, and I just added in 2 small trades. But those 2 small trades, I increased the contract size. A 4 to 1 or 6 to 1 will still pay and cover the cost of everything else and give me net profit. The strangle might be the trade that doesn't work out this week because price is not going anywhere. We've had about a $5 to $6 move on the SPY this week, and the average is around 11 to 12. So I didn't need a bunch of movement this week. I only needed like $9 of movement, and we've only had about 5 or 6. So unless we're surprised with a big Friday up or down day, I guess I'm just really looking to see near the end of the day on Friday, by 2:33 p.m., maybe 3:30 p.m., I'm managing some of these butterfly spreads for profit. And the nice thing is if there's an overlap, somewhere in here, if there's an overlap around that first gap between 433 and 431, there's a chance that 2 of these might pay me. I could get like a 5 to 1 on one and maybe a 5 to 1 on the other one, or maybe a 4 to 1 and 5 to 1 or something like that. If that's the case, uh, obviously that'd be pretty great to get a 5 to 1 on 2 positions, and then I can take the losses on the other and still walk away really profitable. So again, I'm willing to trade whatever I need to do to be profitable. I'm trying to carve out, in this particular Schwab account, I'm looking to go, anywhere between 500 to $1,000 a week. I do that over the course of the next, 6 to 12 months, and I'm just saying, just trading every week. That obviously does some pretty good work into, making this account reach that goal at 100%. The other ones, I'm waiting for more confirmation. So, positions on Alibaba. It's still pretty choppy. I like what it looks like on the daily. I just don't have any confirmation yet. I will be considering more aggressive trading down here. If we hit these lows around $80, I'm looking to get more aggressive. Okay, Baidu, one more thing here. This one looks pretty well postured. Head and Shoulders, this one is, I think I did that. well, did I do that wrong? Hang on a second. Alibaba. Oh yeah. This is the trade. Sorry, I got the pattern upside down. So it's right here. This trade, left shoulder, head to neckline. I'm just waiting to see if this consolidates. If we come back to $60, that's what I meant. $60, very aggressive at that low at 60 bucks. But if we hold this area here and start to break, I'm going to get more aggressive on a push because getting back above this neckline and breaking higher, this fills gaps up here around 150 to 160. Ownership price or participation in the 80s, that's 100% upside. You trade options, you can utilize that leverage, turn that into a much bigger gain. So there's room on Alibaba, in my opinion. I just need to see some better confirmation. Same thing on Baidu. This one, you can see the pattern over here. So this is a daily time frame, really clear head and shoulders, left shoulder, head to neckline, and it's still just in this accumulation phase. So if it takes some time, we start to get some bullishness to up here, great. We break above this neckline at 150 to 160, then we're talking measure moves up towards $250 to $300. Again, lots of upside potential. Potentially, this one has a massive broadening pattern as well. And if I am right with this area being accumulation, this could ultimately be like a $400 to $500 stock. It's going to take time, but again, with participation here in the $100 zone, we get to $400, $500, $600. That's lots and lots of potential to participate. Okay. So if you have any questions, let me know. Leave a comment, like the video, all that good stuff. Subscribe to the YouTube channel. I'm here Mondays and Fridays for the YouTube session, my pulver report. I post videos, whenever I can in the week. This Trader's Path to 100% is an important playlist to me. Check out my Trading 101. Check out my Keep It Seriously Simple. Check out all those videos that are just for timeless education to help traders. I'm also going to post a couple of indicators. It's trading indicators A to Z. And again, I'm here to help. Let me know. You can join my Discord channel. The server is Chris Pulver Trading. Or just subscribe here to the YouTube channel and check it out. And happy trading, lots of profits, and I'll see you soon. Thanks for watching. Bye.